Hi there, good afternoon, and you've tuned into ET now, and this is Market Phataphat with Michelle D'Souza. Along with me, I have Vinny Motiwala. Very good afternoon to you, Vinny. And markets for now holding on to the positive territory as we speak. We did climb to the day's highest point, tad bit lower from those levels right now. If you look at what Nifty Bank is doing, it is marginally outperforming the benchmark indices, 0.3% uptick coming in for the Nifty Bank. If you look at the broader markets, it's the small cap index among the broader markets that's outperforming mid cap index as well as the benchmark indices, 6% uptick coming in for the small cap index. Taking note of what the sectoral performance are doing today, if you look at all the sectors, they are actually trying to nudge to that positive territory. You have PSU Bank Index that's trading higher by 1.6%, followed by metal with an uptick of about 1%, and energy index holding on to 0.5% gain. As we speak, just now you had the Nifty IT index that's actually slipped into the negative territory. As we speak, it is trading flat with positive bias right now, but yeah, that's how Nifty IT is trading. Pharma index is trading with tad bit of negative bias, so is media index. So that's the way how the markets are looking like today. Winnie, for now you have the sectoral indices also trying to come off from the day's lowest point.
Absolutely, but nothing exciting coming in on the market front as of now. But there are a lot of individual movers which are buzzing in trade or seeing sharp falls. And to bring you all the stocks that are in focus, buzzing in trade on the back of news flows or technicals, we have on the technicals today Kunal Bothra with us from the research team. We have Harsh as well as Vamakshi joining in with us. A very good afternoon to all three of y'all. And let me start with the first stock. And what I'm going to be talking about is going to be Ipca Labs and Unichem. Now, both these stocks are in focus today. Ipca Labs has actually seen sharp cuts coming in. Now, why is that so? Because what we saw in an announcement coming in post-market hours yesterday was that Ipca Labs actually acquired 33.38% equity share capital of Unichem Labs. Now, this acquisition was done is to be done on a cash for a cash basis of around 1,034 crores. Ipca Labs will also be making an open offer of 26% for the 26% stake as well. The open offer price is at 440 rupees per share, 13% higher from the current market price that you see coming in for Unichem Labs. Now, the open offer will be aggregating to an amount of 805 crores. What analysts believe and the primary rationale is that the access to US markets and FDA approved facilities is what will support the company. As API raw material inflation settles, they could see some margin improvement for Unichem going forward. Near term, this could be a drag for Ipca's EBITDA margins due to the higher costs, and the deal appears to be prima facie on higher side of the valuation as well. So valuation factor as well as, in terms of some bit of an impact in the near term on the margins, EBITDA margins of Ipca Labs is keeping the stock under pressure. It's down as much as 9.8% as we speak, 10% as of now, Shredder.
Absolutely, and that is Ipca Labs as well as Unichem that are in focus in today's trading session. But all eyes on ABB India, and yes, it's on back of earnings, but not of ABB India, but of its parent company that released its earnings today. And the global parent company, along with reporting good set of numbers, they've also gone ahead and they've upgraded their 2023 revenue guidance. ABB Global has said that the ordering activity in India business has seen a 46% year-on-year jump as well. They're saying comparable revenue growth for 2023 to be at least 10% on a year-on-year basis versus an earlier guidance of approximately 5%, and this despite market uncertainty is what ABB Global actually mentioned. So on back of that, positive commentary coming in from the parent company, the fact that they've doubled their revenue guidance, you can see ABB India actually holding on to strong gains of about 4%. Right now as we speak, the stock is perched at the day's highest point, Winnie.
Absolutely. Let's move on and then talk about Kunal's first stock. And Kunal, you have picked out L&T for us today. How are you looking at the charts for this one? Surely has maintained to stay in the green in the last 1 year as well and seen some momentum of gain. Could we see a better momentum in terms of the gains coming in from the company?
Good afternoon, everyone. L&T has been one of the most stronger stocks in the last, I think, 6 months or so, at a point when the Nifty was also a lot more volatile. Apparently, L&T managed to hold its fort and was one of the few large cap names which managed to come back towards the life high levels as well as go beyond that as well. Now in the last 1 or 2 weeks, the stock went into a mild correction from 2300 levels. The stock at one point had fallen to almost 2200 mark, but now the charts are seeing seemingly coming back into the groove for L&T. The stock has come back towards 20 to 50 mark, And I believe that with the recent spate of recovery, the indicators turning positive, the stock could be in line of coming back towards the previous highs of 2,300 levels. So have been maintaining bullish stance on L&T in the last couple of days, indicating a contra buy, would maintain the stance for a target of 2,300 or higher from a near-term play.
All right, and that is the view coming in on L&T. We spoke about two industrial companies, but you have Milind Karmarkar, who is actually bullish on industrials as well. He believes that the sector should perform well and the demand can be huge in the power, ancillary and the railway segment. Listen in.
I think industrial should do well because
Define industrials for us.
So, okay, industrials is anything to do in power ancillaries, in industrials is anything to do in railways, so things like that. So they should do well because government is spending a lot. The capex cycle has just started, and in both cases, whether it's railways or whether it's power, the requirement can be huge for a country like India going forward, and that is the reason why that space could be interesting.
Let's move on and talk about earnings then. And IIFL Securities, Vamakshi, is buzzing in trade. What was the number looking like for this one?
Well, we need a strong set of numbers that has come in for this counter, and that is the reason why the stock is surging away in trade today, nearly 6% higher as we speak, slightly off the day's highest point. But let's look at the numbers. Revenue came in 15.9% higher at 402 crores, and this growth was actually driven by the insurance broking and ancillary business, which more than doubled during the quarter. EBITDA also came in nearly 21% higher on a year-on-year basis at 152 crores, while net profit saw an uptick of nearly 9% on a year-on-year basis. EBITDA margin has grown for the company by nearly 163 basis points on a year-on-year basis and stands at 37.8%. The decline in consumer customer additions was seen, but that is justified by the management strategy of focusing on the affluent segment. The company also declared an interim dividend of ₹3 per equity share. So good set of numbers is the reason why IIFL Securities is in focus. The stock is surging away in trade, up 6% as we speak.
All right, from one earnings to another then, and Harsh, Nelco?
Well, yes, solid numbers even from Nelco coming through. We have seen the revenue rise from 82 crore, from 72 crore to 82 crore, which is a 14% jump on a year-on-year basis. We're seeing EBITDA rise much faster than that, 25% growth in the EBITDA, and therefore margins have gone up from 19.6% to 21.5% on a year-on-year basis. And we saw net profit surge both sequentially as well as on a year-on-year basis. On a year-on-year basis, net profit was up a solid 87% sequentially to up 10%. The company has also declared a dividend for this particular quarter, and on the back of that, you can see the stock up and away, 9.5% higher.
Absolutely buzzing in trade after its numbers. Let's talk about State Bank of India, SBI, on the charts. Kunal still makes a favorite list, and will it continue to be on the favorite list then?
Well, it seems like because the stock has been consistently performing. In fact, most of the PSU banking stocks actually are now on the verge of breaking out of their previous major swing highs from a 2-month, 3-month basis. And I think that could be a very strong comeback for most of the PSU banking stocks. Now, SBI, the initial breakout point for the stock was around the 550 mark. The stock has scaled past about those levels comfortably, and now it's on the verge of breaking past about the 570 hurdle as well, which I believe could be another level of a up move for SBI. So the stock looks attractive. Have been recommending the stock for the last couple of days and would maintain the bullish stance on SBI. 580 was my initial target for the stock, so maintain that stance with very near term for the stock.
Okay, let's keep an eye on those levels for SBI. Let's move on and talk about Tata Consumers. The company is set to be reporting its numbers today. Mostly it will be coming out post-market hours now in terms of Q4 FY23 numbers. What we're seeing in terms of the revenue growth, a double-digit revenue growth of around 10 to 11% is what we're expecting from the company. Profits expected to see a growth of around 17.6% as well. While margins, we're expecting a 30 basis point contraction in terms of the margins of the company because of the inflationary trends that have still continued, especially in the international business for the company, and inflationary pressures on the international side are much higher. Other than that, the food business for the company, India food business, that's expected to see a strong double-digit growth of around 20%. And what will be leading the growth for the food business is going to be the price hikes that the company has taken. they have taken price hikes in the salt business, so that is leading the growth. So it is going to be a pricing-led growth in the Indian food business, which in turn is supporting the overall revenue growth for the company as well. Let's talk about Nourishco. That is expected to see a strong performance as well, while we're expecting a gradual recovery coming in the India tea business. Let's not forget the tea business was under pressure in the last couple of quarters. 1% growth is what we're expecting for Tata Consumers India tea business as well. Keep an eye out on terms of commentary coming in on the margin front. What are the raw material prices doing, as well as the market share trends in tea is something that we are keeping an eye out on. So let's watch out for Tata Consumers numbers.
Another
today.
minute is what you would want to talk
Yeah.
about Tata Consumers. We'll give you that tomorrow then once we analyze the numbers for Tata Consumers. But moving on, let's talk about Anupam Rasayan, and that particular counter has hit a record high levels in today's trading session. Earlier in the morning, there were news reports stating that the company was set to bag a huge order, and that indeed is how it's transpired. 5.3% was the most that the stock moved on an intraday basis. The company has signed a letter of intent worth about $46 million with an unnamed US companies. On back of this particular news, the stock is on track for fifth consecutive session. So a huge order win coming in for Anupam Rasayan that would translate to excess of 300 crore rupees. And on back of that, you have the stock that's seeing record high movement or either hit a record high with an uptick of about 4% right now.
Absolutely, Kunal. I see one more PSU bank on your list, and this time it's Bank of Baroda. What a move that the stock has already seen. What is the upside that we should be expecting from this one now?
So most of the PSU banking stocks, as I said, are looking quite strong. So it makes sense to go with the trending sector. Bank of Baroda last time, I think in the month of December, had topped out or made a top which was around the 197 mark. I believe in this leg of uptrend, the stock could scale past about the 197 mark, possibly in the next few weeks. The momentum is extremely strong. Volumes have come back quite strongly for many of the PSU banking majors, including Bank of Baroda. I think that should bode well for the stock as well as for the sector overall. So maintain that bullish stance on Bank of Baroda. My intraday targets which I had given in the morning was closer to 188. Maintain those targets from a short-term play. And for traders who are looking out for slightly positional kind of a time frame, could look out for 197 to 200 as a potential target range for Bank of Baroda.
All right, so that is Kunal's take coming in on Bank of Baroda. But Harsh, UPL, why is this one in focus today?
Well, Cheryl, we have Adama, who has reported a weak set of numbers in Q1 calendar year 2023. And let's take a look at those numbers. Sales are in fact down to $1.26 billion, owing to an 8% decrease with regard to the volumes at Adama. The adjusted EBITDA has come in at $165 million versus the $201 million that it clocked in Q1 of calendar year 2022. So a solid decline there as well, nearly 20% down there. And the commodity and crop prices have declined as a result of the slowing global economy is what the commentary that's coming through as well. North American sales have declined over weather conditions, and the Asia-Pac region was impacted due to softening demand. So on both those counts, there are negatives. In India, exchange rates and reduced market demand has impacted sales. The commentary as well looks quite soft on that particular count, and you can see UPL impacted 2% down on the back of that.
Keep an eye out on UPL, but with the country's economic activity that has actually been picking up pace, corporate India has actually reason to rejoice for this as well. And the corporate India risk index is of 2021 score of around 62 is up from 57 in 2020, representing an optimized risk handling. Now, with the scope of further improvement is what we could look at. Now, my colleague Anurag Shah caught up with Bhargav Dasgupta, MD and CEO at ICICI Lombard, to discuss what this actually means for the industry. So let's go across and listen in.
Yeah, this is the third edition of the risk index that we launched. I think the good news is that if you look at the risk index score has gone up by 1 point. That's a good news. But it's driven by two things. One, the overall risk exposure has gone up, but the risk management score has gone up even further. So I think the key message that we are getting is that corporate India is looking at risk in a much more focused manner and trying to manage risk better. Coming back to your question about insurance, look, at the end of the day, if you look at all the risks that corporates have, everything is not insurable. In the corporate risk index, we talk about business risk, external risk, inflation risk. These are not things that we can control. But there are 3 or 4 of those parameters that we can give protection for. In all of those areas, there are new emerging risks. Natural hazards, climate change, cyber risk, new technologies that are emerging, new business models that are emerging in terms of using some of those technologies to manufacture. So all of these things are changing, and the role for insurance will always be there to cover these risks.
And so which segment or which sector the role will improve going ahead because the particular sector need to focus more on risk management?
What we've seen, Anurag, is that across sectors there is a range, and there are certain large organizations seem to be doing a better job of risk management, and as it goes down, it as the size becomes smaller, the score is not as high. So clearly, the smaller companies, there is clearly a scope of working with them and advising them on improving their risk index. If you look at within each of those large, medium and small, there are certain sectors where a lot more work can be done. We see certain sectors like mining, manufacturing, some of the retail side, there is scope for new age technology companies, there is scope for doing a lot more work. I think the objective that we have at ICICI Lombard of preparing this index is to give a tool to boards and corporates to understand where they stand vis-a-vis their sector and vis-a-vis industries, and we can then help them in terms of whatever they can do to improve their risk score. And our sense is there's enough scope for work there.
Yes. Sir, from 1st of April, we have seen that expenses of management, new regulation being implemented. So how beneficial it is for non-life insurance company, general insurance companies, and particularly for your insurance company also, because you are the biggest player in private space?
So the EOM regulation is a progressive regulation. If you look at regulation across the world, most insurance companies are measured only on solvency. They don't even have an EOM regulation. In India, we had EOM. Within that, we had sub-limits for every expense, for every line of business. So it was very, very onerous for insurance companies in India to manage, all of those regulations.
All right, moving on then, Vamakshi, let's talk about Bajaj Finance. This particular counter is in focus, but not on back of its own earnings.
Cheryl, this counter is in focus in the back of the earnings of its wholly owned subsidiary Bajaj Housing Finance. Now, this company reported its Q4 numbers yesterday, and what we're seeing that the NII has gone up by nearly 59% on a year-on-year basis, from 355 crores to 567 crores. PPOP, that is the pre-provisioning operating profit, has also seen an uptick of 52%, while the net profit has increased by 53% to 301 crores for Bajaj Housing Finance. Provisions for this counter have also risen on a quarter-on-quarter basis to 56.91 crores. So, good set of numbers that has come in for Bajaj Housing Finance, and that is the reason why the stock is in focus. Bajaj Finance, please note, Bajaj Finance owns 100% in Bajaj Housing Finance, and that is the reason Bajaj Finance is up nearly 3% as we speak.
Okay. Keeping an eye on Bajaj Finance, that's the news flow there. But Kunal, on the charts, how is Bajaj Finance looking?
Yeah, so today seems to be a breakout day for Bajaj Finance, and that was one of the reasons why I flagged off the charts. The stock has come out of a 2 week of consolidation, breaking past about the 6,050 mark on the spot levels. So my sense is that the stock now looks attractive for another 150 to 200 points on the up move, possibly in the next 2 to 3 trading sessions. So 61, 86,250 approximately could be a potential target range for Bajaj Finance in the next 2 to 3 trading sessions.
Okay, keep an eye out on Bajaj Finance on the charts as well as the news flow as well. Let's move on and talk about Nestle. The company reported its numbers this morning.
Get a smile on your face when you're talking about Nestle. FMCG is like...
It is surely something that I can talk on for more than a minute. You're taking my time up, so I'm going to start talking about Nestle then. Numbers, all-round beat that we've seen coming in from Nestle in Q1 calendar year 23. Whether you look at the revenues, profits, much above expectations, margins in line with expectations. Key highlights, robust sales growth, mainly led by pricing, volume and mix growth. Volume growth, what we infer it as, it's around at 9 to 10%, is what analysts are highlighting as well. And in terms of the commentary coming in, they've highlighted there's a strong growth in rural, is what the company highlighted as well. Let's not forget that Nestle has been focusing on increasing the rural expansion as well. In terms of numbers, revenue saw a growth of 21%, profits saw a growth of around 25% as well, and export sales saw an increase by 25% as well. This is the highest growth for the company in almost a decade is what the company has seen. Out-of-home consumption has seen a strong growth as well. Beverages have continued to witness a robust growth as well. And even rural urban demand has continued to see strong momentum. Company is highlighting that they're seeing softening in terms of the commodity prices of edible oil and wheat, while fresh milk and fuels as well as green coffee continues to be a bit firm. So that could cause some pressure on margins.
All right, that is Nestle India for you.
Just in time.
Just in time in focus for you on back of his earnings. But let's talk about another consumer company, and that is Titan. Kunal, how is this one looking on the charts to you? Do you see this actually scaling new high once again?
Well, from a short-term play, the stock seems to be in the thick of uptrend. It forms a major pattern of lower, higher highs and higher lows on the daily time frame. It's trading about the 200 DMAs, the 50 DMA. And the interesting bit I would probably keep an eye on for Titan would be a golden crossover, where in case going forward, if the stock sustains the current levels, then you might see the 50 DMA crossing above the 200-day moving average. That could be a classic catalyst for a stock like Titan, which has been going through very gradual and a steady uptrend, where the pace of momentum can probably increase significantly for the stock. So Titan is something to watch out for. Whenever that golden crossover happens, if say in the next couple of weeks, then I believe that the stock can probably catapult itself towards 2,750 to 2,800 levels as well over that kind of a time frame.
All right, that's Titan for you, but let's shift focus. Let's talk about Wellspun India, and this particular counter has hit a one-year high in today's trading session. At one point in time, we had Wellspun India that was soaring about 4.7%. It had hit a mark of around 86.9 per share. That is the record high levels. Right now, it's a tad bit lower from those levels. Nevertheless, the company has said that they will be considering share buyback and FY23 dividend on April 24th. I beg your pardon, April 27th board meeting. And this is when they will be also reporting their quarterly earnings. So on back of that, you have this particular counter that is in focus. Remember, the stock had rallied approximately 34% in April so far, and it is set for its best month since July 2021. So this is what Wellspun India is buzzing on back of the fact that the board is meeting on April 27th. They will be considering buyback along with dividend and earnings as well.
Absolutely keeping an eye out on Wellspun India. Let's move on and talk about Shriram Finance. Mamakshi, why is this one in focus today?
Well, Shriram Finance is in focus after a note that came in from GM Financials a few days ago. They have a bullish stance on Shriram Finance, and they believe that Shriram Finance's current valuations offer significant comfort for a meaningful upside over the medium term. The merged entity in their estimates is likely to deliver average ROEs of nearly 16.3% for FY24 and 25. They're expecting the merged entity to deliver a 16.5% CAGR in AUMs as well as a 16% CAGR in PAT over FY23 to FY25. Now, they also believe that Shriram Finance has navigated interest rate cycles reasonably well and thus do not expect any meaningful compression on NIMs as well. Potential exits by large shareholders such as PEL as well as TPG could be a potential cause for the recent underperformance and subsequent value compression. However, they believe that the current market price at the risk reward is quite skewed towards minimal downside from a medium-term perspective. So given all these factors, GM Financials has actually maintained a buy rating on Shriram Finance, given a target price of 1,900 per share. And ever since this note has come in, the stock has surged in trade today. Even today, it's higher by nearly 3%.
All right, moving on then, Kunal, and that was the news factor that Vamakshi touched upon for Shriram Finance, but why is it on your radar?
So again, on the charts, a clear case of a breakout. The stock today, in fact, the volumes today for Shriram Finance is one of the highest volume the stock has seen in the last 1 month. Specifically, the stock scaling past about the levels of 1400, which has been a resistance of sorts for Shriram Finance over the last 6-7 months or so. And again, I think a stock which has trended up quite well in the last few months. So I think in that regards, a stock which looks attractive post a volume-based breakout. We expect the stock to either go into a bit of a consolidation, but that minor consolidation or dip should be taken as an opportunity to buy. 1400 is a key breakout point, so that remains to be a support for Shriram Finance. In case if the stock happens to dip back towards those levels, one should look out for contra buy on Shriram Finance.
keep an eye out on those levels for Shriram Finance as well. But on that note, we're going to slip into a very short break. Viewers, don't go anywhere. We'll be continuing with the stock journey after the break as well.